Well, top of the morning to you. Happy St. Patty's Day from Dan Frio here at the Rate Update, where we talk about housing, real estate, and interest rates. So don't forget, tonight we have the Real Estate Roundtable with realtors out there. It's going to be our first Thirsty Thursday, so 7 p.m. Central Standard Time, YouTube Live. So if you're a realtor out there and you have questions, please come and join us. We'd love to talk to you. So let's get on to where rates are. For those that miss me every once in a while, you can subscribe to my newsletter. You get one every morning, plus one every Friday to wrap up the week. So this is what it looks like. It goes through a ton of data. It's videos, charts, and everything else that you might need. All right, so that being said, let's look at the economic calendar because we have a lot of great news today, guys. The first thing we want to go is building permits. Building permits are up, okay? The number today is numbers that were equivalent back in 2006. Now, I know what you're saying. 2006 was a complete housing crash. But you have to remember, the housing crash was actually created by the subprime market and those option arms and other things like that. So they were bad loans that no longer exist. The reason we have a housing issue today is basically we just need more housing. All right. So that's that part of it. Initial jobless claims. We have initial jobless claims that were down, and we have continued jobless claims which were down, and they both hit pre-pandemic levels, which is great news for the employment front. People are coming back to work, thus being more productive at work. So we have the manufacturing number. This is how much manufacturers in the US are producing. The number was 15, or supposed to be 15. We came at 27, almost double. So what are we seeing here, guys? Basically, we're seeing people going back to work, okay, and production being there. And then we have more housing being built in the masses. This is only going to take us to a better place. And again, this is my predictions, and they seem to be coming true. Every report we get out, it's kind of more and more true than what I've been telling you guys. So let's get back to where are mortgage rates for today. Well, hate to say it, but we just peaked the 4.5 level that I thought we wouldn't be till basically summer. We're close to summer, but we're not there yet. So you might say, Dan, we're not there. Well, we're there. So let me go through this. This is the 30-year fixed rate published by Mortgage News Daily. They do the national average. They survey lenders all over the country, and they come up with these numbers. So they're not my rates. These are the national averages. You go across here and you first see the 30-year fixed rate. It's coming in at 4.48. It is up 6 basis points, but it's coming with a cost of almost a half a point. So if you factor that in, what would that rate be with not having to buy it down? You'd be at 4.5, probably 4.6. All right, so let's get to the 15-year fixed. It's coming in at 3.85, up almost an eighth. An eighth is 0.125. Okay, so that's there. FHA/VA is up an eighth, coming in at 4% right now. The 30-year jumbo is up 9 basis points to 3.95, and we have the 5/1 ARM at 3.82. We have exceeded the 50 basis point triggers that I say on this. But again, this is the 5-year. I would highly suggest, if you're interested in an ARM, you minimally get a 7 or a 10, unless you pretty much know you're going to be out of that house within that 5-year time frame. What's the MBS market doing based on all the news that we have out? It is up 16. So let me explain this, and let me give you my thoughts behind all this. So what normally happens, and I've been proving this, if you watch my channel, I prove this all the time, the markets always overshoot. Okay, so the markets were not real certain what the Fed was going to do yesterday and what their projections are going to do. Well, they came out and they basically laid it on the table. They said, we're raising the federal funds rate a quarter. We were at least going to raise another 6 times. Take that with a grain of salt because you don't know what tomorrow's going to bring, but let's go with it. And then we're going to start unwinding our balance sheets. I'll do another video explaining that. Well, you can't do all this at one time because you're really going to put a hindrance on the economy. So they're going to monitor the economy, the Russian war, and a bunch of other things, and then they'll start deciding. But at least they know they've come out and said, here's what our plan is, and that kind of eased the markets. So what normally happens, like I said, they overshoot. So what my thoughts are is we're going to start to come back a little bit. Rates are going to probably stay here or get maybe just a little bit better, and we should stagnate from there and start to really steady out and not see these 60, 70, 80 point swings in a day in the MBS market. But to explain how the MBSs work, this is a bond that trades on Wall Street. You can see it's actually changing as we speak. Basically, this number here, that's what you want to look at right here. Okay, so this is what's happening to the price of the bond. As this price goes up, when you see a plus, okay, as it goes up, mortgage rates or yields are coming down. All right, that's not me doing it. That's the clickers telling us tick by tick by tick what the heck's going on. So you can see this moves all day, every day. Oh, well, not all day, basically when the market's open in the morning and they close in the evening. So this is kind of gives us an idea, or basically what's going on with mortgage rates. We don't follow the federal funds rate that the Federal Reserve covers. We don't follow the 10-year Treasury, the 2-year Treasury, the Dow Jones, the S&P. We follow the mortgage-backed securities market. If you'd like to learn more about it, Google MBS's, or have plenty of videos in regards to that. So that is what we have for today. If you'd like to learn more about me and my team and what we do, we are the largest mortgage brokerage in the country. We would love to help you. So if you're looking to build a house, we have a one-time close. If you're in the process of building a house and need a long-term lock, call us. If you need a reverse mortgage, we can help you. If you're looking to cash out, a lot of people are cashing out right now to pay off some bills, pay off colleges, put some money in the savings for a safety net, do that. Renovation loans, we have it all. How do you do this? Well, simple. There's 3 ways to get us. Give us a call at 844-775-5626. Schedule a meeting or apply right online. So don't forget tonight's roundtable, a real estate roundtable with those realtors out there. It's our first Thirsty Thursday. Bring your beverage of choice, and please make sure to ask me questions. That's what it's about, for you guys to learn. God bless, guys. I'll see you later this afternoon. Bye-bye.